None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. Monday morning, ready to start a new week. Got Mitch here with us again. He's a little see-through, but that's another story. There's a fair amount going on in the markets this morning that we need to talk about. There's a couple elements that have showed up in the analysis this weekend as the week unfolded. Last week, we continued to see the markets just kind of rip back and forth in opposite directions every day. It ended up that there were 3 up days and 2 down days, and the prices were on the up days were almost exactly the same. They were between 78 and 80, I believe, most of the closes on those days. Couple of things that appear to be unfolding in the background. The Ukrainian situation isn't a situation, I guess. It's not really affecting anything. I don't know what to say about other than it's out there and it's happening. So, but it doesn't seem to be having any effect on the markets. Way back when they tore the wall down in Germany, I made a comment to a buddy of mine. The markets were down really big that particular day, as if it were something that was going to affect the corporate profits in America. And I walked up to one of the guys who was the biggest trader on our floor. I said, "Can you tell me what the collapse of the Soviet Union has to do with the price or corporate profits in America?" And he looks at me and goes, "Guess it's nothing there." So off the market went. It reversed and ended up higher that day because everybody else kind of had the same thought. So same kind of situation here at the moment. I'm not sure that little scrimmage is the next is World War III or any of that. Who knows? We'll have to play that one by ear. I posted something on a Twitter account the other day, and this is slightly off subject, but I think it's sort of interesting and has a lot to do when we talk about interest rates and some of the things going on. But I posted the U.S. Postal Service managed to lose like some ungodly $2 billion in one quarter. How do you do that? How could you run a business and lose $2 billion? And they're desperately going to Congress for different funding and other options. Most of their problem is the problem of America, which is all the legacy pension and all that they're continuing to pay out. And that Ponzi scheme called the retirement and Social Security and just about every pension out there, it could be the straw that broke the camel's back ultimately. I'm not sure how this is going to play out, how it's going to get funded, where they're going to get the money from, all that stuff. So I think that has a lot to do with longer term thoughts, but it just triggered me when I saw that, and I thought, man, I'm gonna tweet that. That's just a crazy thought to think that somebody could run a business that bad. I don't know about you guys, when I go to my mailbox, it's full of magazines. There's about 2 pieces of mail, maybe, that I even care about because I do everything online. So I think they ought to just charge the magazine guys that have 2 resident, like, $40 a piece or something. They'd stop sending them, and we'd all have to stop just throwing them away. We have a little place at our mail pickup. We have a gang mail pickup, and it's just a big bin there, so you can throw all the crud away. So anyway, enough about the post office, but I think it does have a lot to say about the debt structure in this country. things that Janet Yellen actually touched on, as much as she didn't want to. It was only responsible to say so, that ultimately that the debt in this country is not sustainable. There's going to be a point where you can't pay for it anymore if somebody doesn't stop spending money. And certainly the Postal Service isn't looking to cut back. They need money, and I think if you looked at their operations, they're probably doing a fairly decent job of trying to control costs on a day-to-day. It's the legacy costs, and that's the stuff that's, killed Detroit. It's killing all the major cities. It's killing everything. The union slash pensions have really managed to get these costs so high over the years, and they're kind of nudging it higher as we go through, and in the end it's becoming unsustainable. So it's going to be, I think the next 10 years are going to be pretty interesting. Let's go ahead, a couple things here. I'm going to go ahead and okay, so we had no sound. That was fun. I'm going to rewind that. I don't know why it does that. This thing's really quirky. Mitch and I were talking about this software, and it's the only software out on the street that does this stuff. Everybody, no matter who you use to stream these guys have the environment locked down. I'm hoping for competition sometime soon for these guys. What I was saying is the configuration that is unfolding. I've talked about this 12 weeks of sideways range, and this pattern that's been unfolding finally came to a head, and some of you were probably surprised that we had some of the projections that I came up with. I'll go through that in a minute, show you where they came from, but there's some pretty substantial patterns that are starting to unfold that are coming out of this right now. I don't have it up in front of me right now. I'll get it here in a minute, but the VIX is continuing to go down, and this is just really messing up a lot of the option traders now, because the actual volatility continues to contract, which is really hurting a lot of folks that typical market maker types. But the pattern here that we've seen, if you look at across this entire spectrum here, is really set up, and normally these don't work out as what I'm going to point out here that most folks will see right away. A second, waiting for my whiteboard. That's interesting. Where to go? Let's try it again. There we are. So you've got a couple points that this thing is to look at here. You've got this little point here, which was the I guess we'll call it the extreme out of this pattern here, and now we're just right at the top end of this pattern, trying to break out again. And it's going to be really critical. In my commentary, I talked about this is the week that this thing breaks out, and I believe it will be to the upside. And we'll talk about VPM positioning, everything that we have going on here, I think, to understand. But once again, these spike lows continue to be the key points. And I guess if you just draw a little trend line here, you've got a little upward wedge that has formed. And this is pretty typical. It's a pretty bullish pattern. The markets usually break out of the flat side of a wedge. Not always, but normally they do. We're seeing the momentum starting to improve here. PPM2 is getting back in. These are the short-term stuff. We'll go through the intermediate in the middle in a minute. But this pattern is the one that has to be watched, and it is definitely attempting another breakout. Here we are at 1893.35. The high extreme projection for today was 1895 even. Don't expect we'll get above that, but you know, anything's possible. Let's go to the weekly chart. This did this the other day where I changed the values and it didn't work. So let me try something here real quick. Everything anymore, you got a trick, I guess. See if it works. This time it does. Okay. So this pattern here, I've talked about this quite a bit. We're not getting quite the acceleration that would have hoped that we were going to get on a breakout. And this pattern, I'm trying to find a good way to articulate what's going on here. But this pattern, while it's flat, it also doesn't have a lot of momentum in it. And it doesn't have to be a robust momentum type rally to move prices higher. And in fact, this entire sequence I'm drawing on the PPMs down here have been with lower relative momentum while this chart has continued to climb up. You know, we're looking at really, I would call it from July of 2012 where this rally started at. So we're into that. We're pretty close into working to 18 to 24 month trend mode, which is really a mature trend most of the time. I can't imagine it's going to extend a lot. I still expect that this quarter is going to be the top of this market. As I've mentioned several times, it looks like there's probably one more spike out of here. And depending what happens on that spike will tell us whether there's any sustainability to the trend. But once again, I just draw some of these arrows here. These have been all the key points through this rally to where the market has continued to stair step, and we've had 4 of them now, and it looks like we're going to try to push through this week. The market should go through this week, but really short-term momentum is 0.08, so the 10-week moving average is just about flat. I've been talking about these PPMs for the last several weeks. We're now at the PPM2 was around 0.25, is actually downticked a little bit to 0.19, so it's slightly below trend level. 0.15 is sustainable, but it doesn't really present itself as a robust support level. And then 0.2827, this is actually the longer term average, or the 40-week moving average, which is similar to the 200-day, is actually seeing an acceleration. And that is pretty positive from the standpoint of the longer term trend. We'll go over to the monthly here, and on the monthly graph, pretty much the same old, but we're seeing an acceleration on both these numbers here. Let me grab this. You look at PPM1 at 117, 142, and 103. This 142, and the indicators are so flat, it's hard to tell what's going on, but and 117, those are actually upticks on these indicators, which tells you the underlying trend on a long-term basis is continuing to develop. It is not over yet, and as I've mentioned, what we likely to see is a spike out of this range we've been in, then the market trade higher. I'll talk about some of the objectives here in just a minute. The market will trade higher, and then should reverse shortly after that new highs and back into the range and start to form some sort of top with a right shoulder and all that. So we'll develop that as time goes on. But these same spikes happen on all of the monthly charts too. We had one just almost 4 months ago now where market reversed and went up. So we're continuing to see this. I'm going to take off these arrows real quick. And the trend phase that I've talked about several times is when these moving averages, I'm just drawing some lines between here. When they're in this form, this is not where the top actually happens. If you go back over here to the left to the '08 high, finally what happens is the 10 and 21 period moving average start to converge, and that is happening. Actually, you can see it through the numbers here. The 10 is only up 1.17 while the 21 is up 1.42, so it is moving quite a bit faster, probably 20% faster. So that is happening, but this is a super slow-mo chart, which is the monthly, so each bar, it takes a month at a time to edge us forward. So to get it to the point where we're close enough where there's a crossover where the market starts to decline, we could still be possibly as much as 3 to 5 months in that range before that type of event would happen. That doesn't mean that the market can't spike up and already be forming some of these other things on a shorter term basis, but it certainly is showing that that is what's going on there. So let's talk about some of these new objectives. Crazy numbers coming out of the system. I'm going to go, let's just go back to this full screen here, and we'll go to the weekly chart. And format techniques, I'm going to put the price ratio high on. And you'll see 3 dots above this thing here. Show you a couple things actually throughout. I think this is, I'm looking at the production screen. I think you'll be able to read this fairly good, at least for me, enough for me to make a point. And you'll see here that there are 3 new values that just came out on this bar. So we got this new weekly bar, and here comes the projection. So what's happening is this price ratio projection technology that I built into this thing way back in '92, it's actually doing a Fibonacci projection, and you can see each one here before have been projecting these stair-stepping values. If I went through here, you could see that a lot of these values were exactly where the market ended up going. So this is a new stair step here, and the only thing that I would argue is different, but not a lot different. Let's say I'm going to draw an arrow right here, 3 arrows on the PPMs, and and then look at what we are currently. We're kind of seeing the same type of situation where the market went into a trough, and now we're starting to come out of this. But the acceleration doesn't appear to be, from a momentum standpoint, the acceleration doesn't appear to be actually robust enough to continue to move on. This one seems to be the weakest of the 3, and we'll have to watch and see how it unfolds. But the numbers that are coming out here, let me just bring up my sheets here. The numbers are coming out are 1793, 2034, and 2070. And I broke it down into percentages so you can get an idea of what that is. So move to 2073 is about 5%. Move to 2034 is 8.3, and around 10% for 2070. I'm going to show you a couple things that typically, when there's 2 things I didn't put on here, so I'm going to take this whiteboard off real quick. I want to add one last thing here, because this is just what I've observed. How about that? After all that's not on there, I'm going to have to add it in. Let's do I'm going to add in the lower level, and it's not very big. So let me just let me do a couple of things, folks. Bear with me, because it's going to make this part of the presentation a little easier to deal with. Make them a little bigger here. That's all I want to do. So now you can see them a little better. So I'm even going to do one last thing, and I'm going to blow up this little section here. And so I want you to see a couple of things that you can see. There's not only is there a new high projection, but there's a low projection at the same time. So because of this sideways pattern, you'll get both of these. And it's interesting, as I've watched this over the years, so you'll have to take my word for it, is that when there's a larger projection, otherwise the high numbers are much larger and the short numbers are tighter, you tend to trade toward, a lot of times you'll spike up to the first number on the cyan line, which is the 1973, then you tend to trade back toward these lower numbers, and I'll bring up what they are here in a second. They are, let's do it this way. Remember, I set up everything so you folks can be able to see it when I'm talking about this on screen. So the low targets right now, which aren't very exciting, but this is what they are. They're 1741, 1784, and then 1714. And then you've got on the upside, you got the 1973, and then you can't read that one in yellow. It's not a good choice of colors, but that number is the 2034, and then the last number is the 2072 number that's out there on that number, the higher target. So anyway, that's what's going on. And when you start to see some of this momentum come back, let me refresh the scale here. When you start to see, if this momentum starts to rise back, then we would see more sustained. Right now, my expectation is that we'll spike through here. And there's one caveat to all of this, and I mentioned it in the commentary, is that we have to close above the 1921 to confirm this pattern. So we need to get and exceed a certain percentage of this projected gain to confirm it up from a technical standpoint. We've yet to do that. Matter of fact, today, if we can hold the prices in, now we're at 94.12. We're up 1564, so we're getting really close to the extreme high resistance projection and anyway, we're close to that number. The old highs, if we go back, I believe it was this day here, we're going to see, second here, of 1897.28. That's the historical high. We are 2 points from there. The Dow Jones actually made a new historical high on Monday, and that will on Friday, I'm sorry. But so Dow Jones has led the way up, and of course, as we look at some of, you can see the composite is rallying sharply all of a sudden, and this was the source of the contagion that even I talked about. A lot of folks thought that the techs and the Russell would actually pull things down. Well, that's rebounding, as I discussed on, I think it might have been Friday, it could have been Wednesday's Market Thunder, but there was a number out there at the 40-30 level on the composite, and it became right on live on as I was doing the show. There was an aha moment, and I realized that there was a very small, less than a 30% probability that the NASDAQ would continue to decline. And if you recall, for those of you who watched that show, I was looking for this move to 1430, 1450 area, so that's what's happening. So we'll have to watch this pretty closely, because if it holds within the range, then that may be a sign that we're going to make another new high on the S&P and then fail again. So it's pretty tenuous up here. A couple things that I think what I'll do here is I'm going to go over to the VPM website. I wonder if I can see if I can get me out of the way if I have a screen here. Huh, I don't. All right, so we'll just go ahead with this. I'm going to try to slide this. Let me make it a little smaller. That will help to move it over just a touch anyway. And I'm going to slide this just so I'm out of the way a little bit. What's interesting on the sector exposure, we did see some scaling back a little bit across the board. This is the updated one, right, Mitchell?
Yes, sir.
Okay. I was looking at these things. When you look at them too closely, they start to all look the same.
They do.
Got chemicals. You can go through some of the groups. Chemicals got hit pretty good. Not sure what's going on there, but everything else was pretty steady. A little buying, a little selling. When you start to look at the markets at this level, it's very incremental what is being bought and sold. So it's not like it doesn't act like an index because it's not an index. This is the, I guess, the internals of the markets. Most of these indexes, especially S&P, actually all of them that we look at are even cap weighted, or they have some sort of weighting. In the Dow Jones, you've got the Dow divisor, which will skew how the index acts. I've always been convinced that the changes in the index by McGraw-Hill or Dow Jones is always about trying to make the index go higher, so it never goes down. It's certainly not the same index it was long ago, since the companies aren't there, and it's really not an industrial index anymore, even though it still has that name. They probably should just change it to, I don't know what they should change it to, but it shouldn't be what it is. So anyway, from that side, we're seeing that. When we go to funds, just a quick review of some of the transparency in here. You're seeing that most of the fund areas have stayed pretty solid. On investment exposure, you're not really seeing much movement on the funds. They've been pretty steady. There's a couple little things that have come into play, but for the most part, you go through here, you're going to see, if anything, there's been some slight buying coming back in, but for the most part, just a stable environment from that. Mitch, have you noticed anything looking at that? I can bring you up here. There you go. Okay, no sound again. For some reason, when we're changing screens, this thing is not picking up the sound. So apologize, and Mitch, we're having fun on our own there that you couldn't hear.
I figured you just didn't want anybody to hear what I had to say.
Maybe that was it. Anyway, anyway, let's go. I'm going to go back because it sounds like nothing actually ever worked during this period of time. I apologize, folks. This is ridiculous. That I checked all the sound on every screen before we started. Mitch knows that to be true.
Yep.
And we tested everything, but something happens when you get live with this thing. And I am just going to change one thing here, just real quick. And I think we still have sound. Yes. So what I was talking about is, as we look at the sector exposure here, you're really not seeing any real changes. There's some incremental selling across the sectors, but you have to remember this is a preview of probably about 12,000 stocks, maybe 10,000 and change. So these little incremental changes really aren't that much. You're looking at a 4% change in basic materials if you mouse over on the red, 3% in energy. So these are not material changes by any means. And when you're looking at individual stocks, you're going to see rotation within the sectors and all that. So what I was discussing before, the chemicals had the biggest hit there. We saw a 67% decrease in diversified chemicals. But most of the across the board, they're pretty stable. A little bit of selling as you look, but as we go across the different groups, and I believe there's like 102 different groups here that we're monitoring, and you're really not seeing any real changes in there, where 3 and 5% in the holdings, and there's quite a few stocks in a lot of these segments. I don't think it shows in here how many stocks are in there. It doesn't, but you can start to see exactly what's going on. And if you do see a sector and you want to see what's going on, we could pick on this chemicals here, and we can go down and we can actually see in the sector detail what was going on with that particular sector. On the mutual fund side, we did not see a lot of change there. It's been really stable. You're looking at the different allocation funds. Everything's been pretty much, commodities are pegged right now. It's interesting because some of the base metals, there's some activity picking up in nickel and some of the other areas that I've been watching on the commodity side. You have to remember, I'm an old commodity guy. That's where I came from. But the international, pretty stable. Municipal bonds, we still got our foot on the pedal on the bonds, and rightfully so. We'll talk about the treasuries here shortly. So anyway, not a lot going on, and I was just looking at the globe of the glass when we realized we had no sound. But this is helpful. You can see year to date. If you just want to see this week, which would be actually last week, I've been told that that's going to change, but it is sometimes this week. So it depends on when it is, right?
Right.
But actually, it's never this week, is it? It's always last week. So,
well, it's the last trading week. Yeah, we'll get that corrected.
Yeah, that's what I've heard. I've heard that rumor. So yeah. But anyway, it's kind of nice to see what's going on, and what's also nice is if you have you've got a review going or something in your practice. I'm just turning this back to October 14th of last year. You can really talk about what happened in the markets on a whole. You can see this visibility, and down below it actually will show you the different elements when you go to these particular places. So let's move on, and I'm going to go back to trying to see if we'll probably go back with just me alone. I'll make sure there's sound this time. I'm learning as we go. Okay, there is sound. So let's talk about a couple things. We'll have let's go through a real quick spectrum, and then we'll move on. We'll do some individual stocks. Let's take a look at the dollar index here. And the dollar made an interesting reversal last week, and I've talked about all these reversal bars that we see all the time. Well, there was one in the dollar last week, and well, it's not screaming to the upside, it's not going down either. There seems to be this stability that continues to show up right along the bottom line here. I'm just drawing this in here. We've been in this band of value, and these little reversals that keep happening are the points where this thing will go back to the high end of the band. So the way these markets have been trading, and maybe this has a lot to do with the way the Federal Reserve is actually running the markets right now, but that may be that they are providing the stability and within a range, and so the markets don't go too far out of line either way as they're unfolding. So we're continuing to see that happening on the dollar. We're going to go to look at the 10-year, and we're seeing some increase here. We're back up to get this full screen here. So weekly, we're back up to the 265 level. We printed 268 for about 3 seconds last week, 258. And now the market's rebounded back up into the 260s. And if you remember, the scenario that I've been talking about is that we will finish and put a low in the treasuries during this period of time, and we will start to see it move up to the 330 plus range. And the question continues to be, if it does that, is that bad or good for the stock market? And it appears, at least in the short term, that I don't think there's an issue on what the treasuries do until we're at least over maybe 3%. There was an old, I think the old highs was 3 point. Let me just see here. I can do that. We don't have to guess. The high in this scenario was 3.03. I was going to say that, actually. Sure I was, Bob. But anyway, no, I really was. The 303 was the number. So above that number, then you're going to see a breakout. You maybe start to see this thing go to 330, something like that. And it's not really going to be, it's not going to matter until that point. And in fact, the higher treasuries, slightly higher treasuries at the moment, may indicate that there's some of the flight to quality came out maybe in the Ukraine situation. If you recall, we've saw a fair amount of buying in the bonds over the last several months, and maybe that's about to come out of it. But most of the bond holdings on some of the corporates as well as the munis seem to be pretty solid from the trend there. So kind of going through the spectrum here, there's not a lot going on. This has been, there's been a lot of talk around this market, which has been affecting things, which is the Japanese yen. We really haven't dove into any other currencies. This is the dollar versus the yen, so you can see it's not been a real fun ride against that, but this has actually been one of the areas. VPM has a buy right here at 98.42. It's currently 98.26, so it's a little bit under that, but this range, this pattern, typically looks like it'll try to run back up. And interesting enough, this is probably something that could have some adverse effect on U.S. markets from some of the cross spreaders and some of that stuff. But we'll have to see how this unfolds. But this has definitely been in a basing period. I think we're pretty close to a low in the yen, and we'll start to see some things go out. I know some of you I've talked to in the past, you've played some of the ETFs on the currencies and stuff. You couldn't do that. I remember a couple years ago when the Swiss franc was on a crazy tear on the upside, there were some folks that had that in their portfolio. So maybe some of your alternatives, instead of thinking alternatives are REITs and gold, maybe there's something more. There's some other real alternatives and places to actually go to, and maybe we'll feature some of these things on future meeting. But as we go through those things, that's pretty much it. Mitch, why don't we? What we want to do is we're going to go through the stock of the day. I'll make sure I have Mitch back on screen so we can talk about these things. So what stocks do we have today?
Oh, probably the most commonly watched one, number 3 in the database, Apple. And
Apple, don't they have earnings coming out?
I believe so.
I know I helped them yesterday. I just went and bought an $800 iPhone, $890 I think it was, because mine broke. But anyway. Yeah, so Apple is moved up. Let's see here. What model do we know? What right off?
Yeah, right now we're long it on the 3.2 system.
Okay, so I need to switch this out.
Of course, they made news last week announcing that they haven't announced. Dr. Dre of Beats announced in advance that they're in negotiations to get bought out by Apple. Right. So I guess they're finally looking to raid some of their treasure chest of reserves over there. Yeah,
it's kind of funny though, that whole purchase, and Mitch and I were talking about this a little earlier. They're really after not Dr. Dre, but Jimmy Iovine, who is an old buddy of Steve Jobs, but is if you know anything about Jimmy, he is an icon in the music business. I think he's produced something like 280 some odd different bands, and Dr. Dre happened to be one of them. He brought him out many years ago. I am trying to get this strategy to format here. This should work. Yeah, there we go. Now we got the buy in here. This is 3.2 on here. So we've bought it at 524. We're starting to blow out of here a little bit. There is, from a technical viewpoint, everything I've been talking, I want you folks to realize when you're looking at some of these trends that what we have here, it flows through the board. And this is how VPM thinks, or maybe more importantly, how the creator thinks. But we saw an exit over here on this system, and then we've been out, and now it starts to show some trend attributes. We come back into this market. Now, somebody always wants to go, why didn't you do something here? Well, it didn't figure it out. That's why. It's not trying to catch every little dip. It's trying to catch where the least amount of adverse excursion can happen. That's always the goal of VPM models, trying to find a point in the trend where once it gets a buy, that's going to continue to go up. It's one of the things that investors, and I would have to say especially advisors, can't handle any downside. Their tolerance to downside risk is, I don't know, can it be less than zero? I don't know what it is, but it is, and a lot of people get that way. So if it doesn't go up right away, but it happens to be a human trait, not necessarily advisors. It's a human trait to not wanting to risk money and not have any money under risk. But we all feel it. It's where you get away from it is when you start to understand a strategy that you're deploying and that the probabilities of the strategy. In the case of Apple, I'll bring it up maybe in 2.0 here. It's got a pretty high effectiveness rating, so it does a pretty good job when it gets in, and it's trying to capture what it understands, not capture every high low of the market. But this pattern here, it's almost similar to what we had in the markets where we went sideways. Finally, we broke out of the pattern, and typically what you're going to see is a pattern like I've drawn in here. And if that starts to unfold, then all the moving averages, like over here in these trends, you start to spread out. Are we going back to retest 700? I don't know. iPhone 6 is coming out in September, I hear.
Yeah, it hasn't been formally announced yet. But
no, but it's out there.
The rumors.
It's out there. August, they're talking about a 5-inch screen, and they're talking about a 6-inch screen, and so they're trying to compete with Samsung with the big screen. So it's like carrying a mini pad with you as your phone. Kind of ridiculous looking. I've seen folks with the Samsungs out there. I'm not looking for it, but anyway, there seems to be, at least Apple thinks there's a market for it. Maybe there is. And they're starting to still make an impact in China, which is maybe that's starting to show up. As far as innovative new products, maybe there'll be something in that larger screen they can do with the more real estate. Who knows? You know, we don't have the master marketer around anymore. Mr. Jobs is gone, and see what these folks can ultimately come up with. So Apple is Apple. It is going up. There is, oh, I know what I wanted to bring up. The PPMs here. You're looking at 1.12 on the 10, 0.37, 0.65. Anything over 0.25 is a trend. The 1.12 means that the 10-period moving average is going 112 while the 21's only going 40. And so it's pulling away from all these averages, which means it's trying to get to, just draw an arrow over here, at this beginning phase of an acceleration of a new trend. That's what it looks like. And it's flattened out a little bit, so it may not be as steep, but nonetheless it is expanding, which tells me that the moving averages are widening out. So that's all you want to see within a trend. If you're a trend follower, you're doing an intermediate trend, you want to make sure that you're seeing at this stage, you want to see, once you get to breakout, you want to see these accelerations happen, and that the alignment with these moving averages come into play. All right, next stock.
Oracle, ORCL, another commonly held security in our system. Also on the 3.2 system. I'll try to keep it easy on you.
Okay, good. Thanks. Appreciate that.
Do what I can.
Yeah, you know, my birthday's coming up, so be nice. Let's see here. So yeah, we're seeing nice same things here. I I think it's important for you folks to understand what's going on with these trends and how VPM thinks. And at least that's what I think. Until you guys start telling me different, I'm going to keep thinking that's what you want to know. So feel free to call me and tell me, no, that's not it, Bob. I want to know this. But once again, these moving averages have spread out, okay? And what you're seeing here is 0.73, 0.66, 0.61. So you've got a pretty stable, those moving averages are going to stay in relationship right now with how they are. They're moving pretty much in tandem. And that's once you get to a phase, that's once they spread out and you get the spreading, then that's what you want to see. This looks like a pretty stable trend right now. And it looks like we're very close to making a new high here. Let's see what that, let's just see what that high was there. The high right here was 42, so we're 41.70. Is that the last trade? High 41.80, yep. 41.70 last trade. So yeah, so real close to breaking this out. Don't have any price objectives, so let's just see what we got out there. Let's turn on the high price objective and just see what we get here. Look at that. There we go. We're gonna see the current price projections on Oracle, and there's another place we can go. A couple things that we have that I think is helpful from evaluating different types of trends and expectations is, one is looking at it from this viewpoint, what the Fibonacci numbers are saying. So we got, let me just get up over here, and you're looking at, I can get it down there. High target 46.45 is 43 to 46 is the target range. So that'll be just above the new highs. And Mitch, you wouldn't happen to have VPM up. Do you know what we're up on this particular stock right now?
Currently, we're up 9% on it.
You know what?
9.9% actually.
Wonder why. Yeah, I'm not logged in here actually. I need to log in, but that's okay. What? How much? 9.9. What's the expected returns here?
That's what I'm pulling up right now. So expect to go up to $85.
Wow, that's fun.
Yep. So 70%.
That's not 46.
No.
So 85, that would be a doubling of price, right? What's it show that percentage gain would be?
70% return.
70% return. Well, that'll be fun. So don't get out of this stock anytime soon. Let VPM get you out. I have no idea whether that's going to happen. Seems pretty outlandish, but at least we know we've got another 10% here, getting up to 46 from 41. That's pretty close to another 9-10%. So this stock is in a good, robust trend. You're seeing all the things that you need to see to go forward. So, next stock.
Next stop is Home Depot HD. And this one currently is optimized at the 1.2 trade system.
Okay. Thought you were going to make it easy on me.
Not today.
All right. So we just recently got out, we had it in and out over here, and no position right now.
Correct.
And if we start to look, this is so we're out of this, and just bring up the whiteboard really quickly here. The whiteboard is up. So you're going to see PPM minus 0.56, minus 11, and minus 2. So all of the averages are doing the opposite where they've turned down. As far as getting a buy signal in this stock right now, it'll have to stabilize. Maybe it doesn't go very much lower. That's why the fact that we have an exit on this stock doesn't mean it's a short. It just means it's not going up right now. And remembering that the basic philosophy is that VPM would rather be flat in a position than that has the potential to go down, and would only want to buy when there's a high probability that the new trend is going to form, and that's what it's been told to do, and then monitor some of these situations I've been talking about and and trying to bring it into more of a perspective of what the models are actually doing. So this stock is not much to talk about. I guess maybe we could do one thing here, and let's. I think I have. Let's put the low. See, yeah, okay. Now there's some downward targets for this stock, and we'll finish there as we've been having lots of fun talking about stocks. We're getting short on time, but so let's go ahead and look at the low target is for this stock is looks like 74 to 69 is the range. So there's some potential downside, about 10%. It looks like, at least from a pattern viewpoint. That's what we're looking at there. So we're in pretty good shape as far as being out of this, and maybe there'll be a better opportunity at a better price at some point on this stock. Just a quick review, a couple things we haven't talked about today. I'm going to give Mitch a break here. Make sure I still have sound. I do. A couple things that we've talked about on the hourly cycles, and that's been flowing pretty good. We saw an hourly cycle come in pretty much where the market's completed its move today. We're hanging around. These are the futures here, and we're seeing that there's, interesting enough, one of these veils are starting to form, which usually suggests that the market is in somewhat of a topping range, just like what we did over on the section over here. Let me just bring up a whiteboard here real quick, and we've got about 8 minutes to go in the show. So down here we had where all of the ribbons were below the market, showing support above here, here resistance. We are back into the resistance mode again as we start to approach the historical highs. So it may be that we're still got some work to do. Maybe we're not going to get through here, but certainly it can go a bit higher. And like I said, 1903 is a very short-term target on this. If we can get above the 1990, what is it, 1897 numbers, 1897.28 level, then we're going to go to the 1905 and maybe 1910 level as an extreme. But this veil is starting to show some resistance, and remembering that this is a 24-hour graph, so this actually never stops trading. You can see time slots here at 1 o'clock, 2 o'clock, 3 o'clock in the morning as we actually form the lows here at that point in time. One of the things, I'm pulling this over a little bit, you can see the next cycle is due about 18 hours from now, which would be sometime early in the morning again. It seems to be running that we are setting up these low bottoming cycles early in the morning. So if we continue to trade up overnight, we hold these prices during the day and start to trade up overnight, we could see a high early in the morning and then start to see some selling, or at least a consolidation. And now if we get a close over 1882.60 today, which looks like it's pretty strong probability that's going to happen, that we're going to see some of these higher levels challenge, and then all we're going to need to do, and I'll have numbers on commentary, and we'll certainly talk about it Wednesday's Market Thunder meeting, is we'll be talking about where the support levels are, and I'll have numbers on the sheets tonight once we get everything done there. We haven't looked at much of the activity here, but on a short-term basis. But you're seeing here, this is the short-term this is the E-mini futures trading, and we're trading about 200 points off of the highs right now, basis the futures, and it looks like at least the pattern for the moment is stabilizing. Let's go here. This is a 1-minute graph. Let's go to a 5-minute. You can see it stabilized at these higher levels. Here's another one of those where I call the veil, where you see the lines above the markets here. And then now we're setting up a pattern that they're going to try the highs again. We'll see what they can do. It might be a little later in the session that those things come into play. One of the things I have not brought up today, and matter of fact, I don't think the last couple meetings, I just want to get a bad tick on that screen there. Let me refresh that. This is the weekly graph. In fact, let me just change something here real quick. So what we're seeing here on the S&P is we're starting to see this market unfold in what I call a rope, and I have a theory about this. You never sell a rope. So this market, when all of these linear regression lines get really tight, it tends to be a trend that's unfolding here. So we saw one here where it trended up into this high. I think there's a little bit more into this market. Like I said, we'll see if we get as high as the 1973 is a new target range, but initially it's 1903, 1910, and then a pivot number in between at 1920. So a close above there will actually start to show that the market's going to move a little bit above there. So maybe we'll bring Mitch and I, we'll have a little chat here. So I can see he's getting ready, so I'm going to bring him in here. Anyway, Mitch, did you see anything while you're doing your work this weekend on anything? It's been pretty non-eventful as far as the database goes and anything.
Yeah, I mean, it's been pretty quiet. There really isn't a lot to grab anyone's attention. There's another buyout announced today. I believe the name of it was Pinnacle Foods by Hillshire. So they're further expanding the brands of the same makers of Bird's Eye, and I think Little Debbie is also part of that brand. So that's another opportunity for anybody that's long that to capture any gains made on it, because right now it's trading right at the proposed execution price.
What's the symbol in it?
Symbol is PF for Pinnacle Foods. That's company getting bought out.
Who's it? Okay. PF?
By Hillshire.
By Hillshire, yeah. Okay. Yeah, matter of fact, let me just bounce that over on the screen real quick. Take just a second here. So you can see this stock has popped up, and that's exactly what we talked about. If you do have this stock, this would be an opportunity. If it's trading at the deal price, take it and run.
That's right.
When you do that, make sure you go into VPM and turn the stock off for today. Sell it. If you do it tomorrow, whenever you do it, just take and turn it. Deactivate or stop it as of the day that you sold it. And then the VPM system's going to reflect that transaction pretty closely to what you did. So we'll go back. Anyway, that's a good thing to know. And we'll go back to our final screen here. There we are. But yeah, so those are, once again, just trying to emphasize activities, things that you should be doing when the markets are jumping around, and especially on those of you who are doing individual stocks, you're going to have a few more considerations and things to deal with as the markets unfold. On an index standpoint, you just don't get the same type of activity. You're really tagging along with the bigger indexes. And I actually didn't touch on this, so in 1 minute I will say that the VPM models continue to be right at a 60-40, a pretty conservative mix on balance across a lot of portfolios. We have seen some that have much more invested in that, but that's pretty typical across the board. And it continues, even if the market goes higher here, it's going to be appropriate. However, I wouldn't be surprised if we do get some closes if the market stays above this 1882 and we close maybe at 1900 or greater this week, that we couldn't see some minor rotation back into the market, because it's very possible to get to, if we get to the higher numbers of 2030, 2070, that isn't going to happen overnight. We're talking about maybe another quarter, maybe extending this rally into fourth quarter. So our job is to monitor the markets, respond to the markets as they change, not predict what they're going or what they might do or might not do. What we're hoping to do with this show is to give some perspective of what is happening and how the models are going to respond. So with that, I guess we'll say goodbye. Say goodbye, Mitch.
Goodbye.
Anyway, I'm just trying to be silly. Anyway, folks, tomorrow, just real quick, I should have said this earlier, but the market,
Process Warriors.
the Process Warriors won't be until 4 o'clock tomorrow. I have to be out of the office for an extra hour tomorrow, so we will see you then. Thanks for coming.